In this chapter, you will learn step by step how to complete trades. First, we will discuss cryptocurrency trading compared to Forex trading. Then, the overall process of buying and selling crypto coins on exchanges. The foreign exchange is also known as the Forex. This is where all the world's foreign currencies are traded on a decentralized global market. Both the Forex and cryptocurrency markets are influenced by supply and demand. The cryptocurrency market is structured to work identically to stock market trading, with extreme price swings, stop loss protections, profit objective orders, and the volatility that comes with currency speculation on the Forex. There are also a few differences between cryptocurrency trading and Forex trading. The biggest difference that sets these two markets apart is that most cryptocurrencies have a limited supply. New supply is added at a predetermined and decreasing rate. Another difference is the size of the markets. Forex is estimated at $5 trillion, while the cryptocurrency market is younger and smaller at 3 billion. A crypto coin's value is heavily influenced by the cryptocurrency ecosystem, while the Forex is influenced by the economics of the individual countries that are being traded. And finally, cryptocurrency can be traded all day, every day, whilst the Forex is only open Monday to Friday.